What's up, millennials? Today I'd like to share with you my thoughts about why I believe that Xpeng stock, so XPEV, might go higher in the next coming weeks compared to going lower. I think there's a likelihood that it is going to go higher, and today we're going to use technical analysis for that. Today we're going to be taking a look at multiple indicators to show you that I'm leaning towards the upside in the Xpeng stock, so XPEV. First of all, we're going to take a look simply at the trend of the chart. So right now we are on the daily chart, and I'm going to zoom in a little bit so you can see it a little bit better. So each of these vertical bars is just 1 day of price action, all of these green and red bars. And first of all, we can see that we have a nice uptrend going on right now. We can see that we had a nice low coming in over here at the beginning of March, and now we created a higher low in the end of March. We also had a high over here, and we just created a new higher high compared to this high. So first of all, we have higher lows compared to, so a low over here which is higher compared to this low, and a high over here which is higher than that high. So I believe that is already a nice indication of an uptrend, which is generally a bullish signal. The next thing I'll take a look at is the support that we are currently facing. So the support that was actually created by this level over here at around $31 more or less was actually created all the way back here when we had some price action going on all the way in November. And now we seemingly seem to bounce off of that support again right now just a few days ago. So I think this level of $31 more or less is going to be quite significant in the future. On the other hand, we do have some resistance coming up. Actually, right now, we already tested that resistance a few days ago because we had resistance at about $39 more or less, which was created a little bit by this price action, but mainly because of this low over here and this high over here and this high over here. So I think also that $39 level is an important level, and it is seemingly right now the reason for which we are going back down a little bit. Now, it's not just the resistance line at $39, but it also is created by this 55 exponential moving average, which on the one hand often holds up price action as a support, but it also is acting often as a resistance instead. Here you can argue that it was used as resistance, and right now we seemingly bounce off the 55 EMA again, showing that we are definitely turning into resistance. So that is definitely a more bearish signal, but I believe that might be a little bit more short-term focused, as I'm going to tell you later on as well. If we go to the indicators, let's first of all go to the RSI. So I believe this is a nice constructive read. First of all, we have seen that the RSI, which is this blue line over here, has crossed the exponential moving average on the RSI, which is this white line over here. So the blue above the white line, that's pretty good. And then we saw the RSI going all the way up and then bouncing back off that white line, which is usually used as a support line on the RSI as well. We bounce off it, go back up, and I think we might actually go down again and bounce again off of that resistance line, off that support line instead. But that is probably also a short-term move instead of a long-term move. So long-term, I think the RSI looks very bullish, looks very constructive, but short-term, we might see a little dip in the next days or so to the downside instead. We see that same bounce we saw on the RSI. So again, this bounce over here, we see that also on the stochastics. So we had a nice move to the upside, then the stochastics came back down and used this slower reacting stochastic as a nice way to bounce off of. And also if you look at the MACD, which is the blue line over here, versus the signal line, which is the orange line, we saw that the MACD went up quite a bit and then bounced off the signal line beautifully, and to turn that back into a bullish move to the upside. So that's pretty good. One thing I will note on the MACD is that we might see some bearish divergence that we are working on at the moment. It is not confirmed just yet, but if you look at the histogram versus the price action, we see that we are, as we said in the beginning of this video, making higher highs. So we have a high over here and a higher high over here. But on the MACD, we might be creating a high over here on the histogram, MACD histogram, and a lower high over here. So that would mean that there is bearish divergence, meaning that the price action is making higher highs, whereas the indicator is making lower highs, which is bearish divergence and usually a bearish signal as well. So again, I think that in the short term, what we might see in the next couple of days maybe is that I'm leaning a little bit more towards the downside. If I would have to put a price target on that, I'd probably say we might go back to the $33 to $34 level, mainly because of that resistance of the 55 EMA, because of this resistance line at around $39, and because of those RSIs potentially going back to that EMA, and also the MACD potentially going back to the signal line. So we might instead see a little downside in the next coming days to maybe $33 to $34 more or less, and then we could, in the longer term, so in the next couple of weeks more or less, then I'd be leaning more towards upside, because the indicators do seem to be quite favorable in the long term, and I'm talking about a couple of weeks, maybe 2 to 3 to 4 weeks or so. And especially, I'd be very bullish if we are managing to pierce above this 55 EMA, which is this white line over here, and above this resistance line at $39. If we do close a candlestick above that level, I would actually target a move relatively quickly, maybe even back to that previous or another important resistance line at $46 instead. And yes, I don't really see a lot of price action between those levels. Maybe we would have a short-term pullback along the way, but I do think that in general, if we pierce above this resistance, if we close a candlestick above there, we would likely target a move back to $46 more or less. Now, as I say in all my technical analysis videos, technical analysis is not guaranteed to work out. It's not going to work out in 100% of the cases, but if I would have to put a percentage on it based on the indicators that we have been seeing in this video, I would say that I would be leaning towards a bullish posture in the next coming weeks or so. So it's about 65 to 70% likelihood that we would see more upside compared to downside. And I believe that technical analysis can be a very useful tool to have in your toolbox, but it definitely should not be the only tool that you have to base your analysis on. And I'm also working on a course about technical analysis for complete beginners. If you would like to stay up to date and enjoy a little present when the course is launched, then you can opt into this website over here to keep you in the loop. If you go to nesami.com/TA, you can then leave your email address, and I'm going to give you updates every now and then. Also, let me know if you have any feedback about these videos, because I just started making these technical analysis videos and I'm just trying to look for the level that I would like to be on. If it's too easy, let me know. If it's too difficult, let me know. And if you have any questions, let me know as well, so I can answer those questions in future videos about technical analysis. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!